Take me to the sea, wash away my worries, let my soul be free. Take me to the ocean, take me to the sea, wash away my worries, let my soul be free.
Hello world, I'm Mhax. Back in IRL, I go by Curtis. Welcome to another episode of the State Copy Podcast. As always, I'll remind you to review episode 0 and its appended segments for terms, conditions, and disclosures applicable to the entirety of this content. Thank you. Well, hey, good morning. It's been a few days since my last show. I needed to take a break for reasons family, and I'm ready to get back on schedule here. I'll try and get back to my 2 to 3 eps a week cadence. So I in my never-ending journey to understand what the hell my show is, it occurs to me that what a really useful thing I could do with this program is just share what I'm watching. I feel like that could be really useful because I don't want to tell others how to interpret this. As always, what I'm trying to do is listen to the bull case and the bear case and stick them together in a way that makes sense. So that means I spend a lot of time listening to both. And right now there's a lot of bear cases. Like everybody has something miserable to say about how everything's about to play out. So I have a lot more of that content than I've been absorbing lately. And it's kind of a drag to listen to everybody go, it's all going to shit. But I think it's necessary for, making sure that the thesis that I'm going to play is accurate. I have to put in that time. I have to really try and understand it and make sure that how I'm doing it is somebody who's trying to be completely agnostic to the emotion of it and just kind of look at it and make accurate sense and forecast. So I want to show a collection. I'm going to lay out a collection of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 videos of that. This is all recent content that I've absorbed over the last week. And I'm just going to call out some of my thoughts on each and how I'm consuming them, how I'm trying to integrate them into my thesis. And then I would say, don't use my thesis. But I think it's useful to look at specifically a lot of this content and develop your own thoughts about how to interpret it all together. Because these things all exist together. They don't exist in a vacuum. And I think your forecasts will always be lacking if you're not well-rounded. You really have to look at as many different views as you can. So let's dive right in. In not any specific order. I did organize these a little bit. I'm going to start with the bear cases. As I said, there's a lot of them. So let's get through them. The first link I'll provide is to one from Blockworks Macro. This is Money Supply is Falling by Most Since Great Depression with Danielle DiMartino Booth. She's brilliant. The interviewer's brilliant. Jack Farley interviews. And I got to, it looks like the 36-minute mark of this. I want to call that out too, because it's important if you're only taking a snippet of what somebody says. I don't, for whatever reason, life interrupts or whatever, and I didn't get to watch the rest of this. I'll probably go back and watch it because I found it to be really fascinating conversation. But as I speak about it now, I'm only really credible about the first 36 minutes of it. And Danielle goes into, let's see, there's the intro. The next is the deathly silence in the private equity world. Talks a lot about like VC capital right now, the dynamics of VC and record unicorn. That's like $1 billion finance or valuations of new business. I found that all really educational. There will be a mark-to-market moment. Really good. Issues in commercial real estate. This is something I've been talking about because I just don't see an easy way to get ourselves out of this corner we're painted into in commercial real estate. So I found that hugely useful. Next is auto loans that are in distress. This is really helpful to understand where the pain is in auto lending and how it kind of, how we got to this place we're in, where there's all these 140% loan to value collections of paper, mostly with small banks. And then it got to residential housing market, an overview. Next, she goes on to talk about Fed expectation. Fed expects a recession. Money growth is lowest since Great Depression. The debt ceiling. The Bernanke doctrine in jeopardy. QE. I just think we go to yield curve control. I think that's sort of, once we started the QE path, I think, and I'm guessing that's what's said here. No, I'll have to go back and watch it. It's monetary debasement. And there's a big difference between that and inflation. It's like inflation is a supply and demand imbalance for a good like gasoline. If suddenly there's a lot more demand than there is supply, price go up. But that's specifically because of that little supply and demand imbalance. Not so little in the case of gasoline. But currency debasement, prices go up, but it's because there's so much debt accumulating on basically you're bringing the value of all the dollars down in comparison of everything. And so the next conversation I'm going to link is the sovereign debt bubble with Luke Gromen on what Bitcoin did. Peter McCormick show, I think is his name. Great show. Highly recommend. He's a Bitcoiner. You got to listen to everybody. Your thesis sucks unless you're listening to everybody. You got to listen to the Bitcoiners. You got to, if you're going to listen to crypto, you got to listen to the Bitcoiners, maxis, the Ethereum maxis, the everything else maxis, and you got to put them together. And then when you get done with that, you got to listen to the crypto sucks maxis, and it's all a fairy tale. And buy gold, the Peter Schiffs, got to listen to him. You have to listen to everybody talk. That's the trick. I really like the guy that Peter McCormick interviewed, Luke Gromen. I watch most of his content. I think he has a really, he offers really like tight, what's the word? Compressions of like market dynamics and how they play out from way down here to way up here. Like I find I really enjoy his perspectives, and nobody gets to be 100% right. So he's not going to nail everything perfectly, but to just get a really cohesive, like granular, from a commodity perspective and then all the way to a macro view of how global monetary works, Luke Gromen, FFTT, love this content. So he was on probably one of my favorite humble, like nice Bitcoiners, Bitcoin Maxis shows. And they talk about, so here are the segments to give you a feel for it. They talk a little bit about how Luke feels about Bitcoin, because it's a Bitcoin show predominantly. It's called What Did Bitcoin Do? What Bitcoin did. And then here's where it's very useful, even if you think both Bitcoin and crypto is bullshit. Listen to this conversation about the social impact of inflation. The sovereign debt bubble, and that's the show. It's the social impact of inflation. Then they go in to talk about Operation Choke Point 2, and that's where it seems pretty clear that the boomers in power who are want to just hang on to the status quo and are closed-minded about what a future outside of the status quo can look like, have made are making a concerted effort now to like sort of burn all the bridges to and from crypto, like they did in the past. Operation Choke Point 1, which was about the pornography industry and a couple other things, where they kind of, marijuana, I think, is sort of a flavor of that. It's where they basically made it impossible to finance some stuff that wasn't socially compatible with their collective view. Something similar is happening with crypto. It's at the first they laugh at you, then they fight you stage that Mark Yusko is always talking about. So the fight's starting, and that's what they're talking about with this Operation Choke Point 2 stuff. Inflation, interest rates, and QE. This is all really important stuff. Like if you want to just really get what the hell's happening and not just don't settle for some bullshit you hear through a corporate news outlet. Go to these. This is the people that they are listening to, and then sort of forming into something that fits their sponsors. The financial incentives laid out by their business. That's how it works. It shouldn't be crazy to think you can. We now live in an era where everybody can have a TV studio. You don't have to settle for some corporate outlets show, and you'll see all of it. It's funny, actually. I'm noticing all of these anchors just peeling off from like the CNNs, Foxes, ABC, NBC, and they're just becoming podcasters because you don't need, like Chris Cuomo. I saw a clip from his show. I don't really watch any of that, and he's just recreated corporate media, I feel like, in YouTube. So I don't really, but I saw him doing a show that looked very much like Chris Cuomo's CNN. He's like, screw you guys, I'll just make my own. And it'll be better. So that's what this YouTube land is. It's where everybody kind of gets equal share to talk. And you're right to think that that's noisy, because it is. But also, when you learn to look for the really good stuff, it's all right there without a corporate selfish corporate interest. It doesn't have to. These people put their content out, and then they get to make money on all of the valuable knowledge that they are sharing, and they make way more than they did with the corporates, and it's not tainted with whatever the corporate messaging is. And that's just a really beautiful lens of which to view all of this kind of content through. So I'm trying to help. I don't want to say listen to this view. I want to say listen to all of these views. And I'm trying to and then you can, like, here's a bull case, here's a bear case. You put them together and decide for yourself. And I'm trying to lay out breadcrumbs that'll help people find that. So I find this conversation incredibly informative. A lot of it's bear case for global monetary. And the eventual sort of the inevitable future of the euro dollar. Then we go on to Jeff Snider. Jeff Snider Live 2023 Recession Deep Dive with the Rebel Capitalist. George Gammon show. And these guys, I would put in the George Gammon. I would put in the crypto's never going to work because hard money is flawed. And I think once you translate the eurodollar over to a stable coin on Web3 rails, you get something that George Gammon would agree with, but it's technical and it's hard to go find how that's the inevitable conclusion of Web3. So a lot of George's content is crypto sucks, it's never going to work. Sorry if that may be an unfair. I actually think George Gammon does try and understand it. Now, Jeff Snider is the most knowledgeable person I've found on the planet about the eurodollar, the inner workings of it, the how structurally the banking system works. And he's very careful about making forecasts or trying to weigh in. I think most of his content just, and I've mentioned it a bunch of times, I watch most of his stuff because he will tell you very technically how money works and how our system works. But it's more advanced. Like there's going to be a lot of like going and looking up terms, and unless you just watch all of his stuff for like 2 years, like I've been doing, it's got a big steep learning curve. But if you can get there, vital insight. I'd put these guys mostly in the bear case too, because I think they see what Danielle DiMartino Booth is talking about dovetails very nicely with this conversation, how there's sort of an inevitable credit crisis in front of us. But so somebody like George Gammon, I think what he's going to do is he's going to try and look for the right spot he's going to be in cash, probably for too long. He'll probably hedge with some gold. Maybe even a Bitcoin or two now. I don't know. And he will mostly be looking for an opportunity to swoop in and buy real estate, because I think he sees that I don't think he wants any part of commercial real estate. I think most of what he's done is residential real estate, and he sees like maybe an opportunity for that price to come down at a time when everything corrects. I think that's what he knows, and he's probably going to look into buying cheap. And I think he may also be, because he's mentioned it a few times, looking for the right time to short the S&P. I think that's going to, from what I understand of the things I've heard him say, I watch a lot of his content. I think that's how he'll play it, which is radically different than what I'm doing, but I love hearing what he has to say about it. That's how I build what I'm doing. So, I got to the 18-minute mark of this conversation and I was distracted, but I feel like I watch so much of what these two have had to say that I kind of know, I find the conversation fairly predictable. But I still learn so much from the little tidbits because they understand global monetary at a higher level than I do. I'm trying to stay more zoomed out than that. And they just structurally call out so many little things. So a lot of it gets in through osmosis. Honestly, I don't know how it works. Anyways, next I'll link another George Gammon episode that dives into commercial real estate. The commercial real estate crash deep dive. This is, let's see if I can get the guy's name. Oh, it's Ken McElroy. I'm trying to see where he's from, though. They've got some sort of live version of the Rebel Capitalist coming up that they talk a lot about. This guy manages some massive, I can't remember how many properties, but he manages $1 billion portfolio, it sounds like, or many hundreds of millions at least. And he specializes in the commercial real estate business. And he manages, it sounds like he's mostly cash, and he talks about some of the technicals of how they're managing their portfolio while they're all cash. And that's really important if you're sitting in cash because you're trying to time the market like these two gents are. You want to be making yields, and it's pretty easy to do that. Even, I mean, you can buy a 3-month treasury or with Treasury Direct, or you can just do a money market account with your bank. And that's what I talk. My parents kind of are in the place where they think crypto's madness and way too risky for them. At least my mom is. My dad's he's like, oh, let's give it a shot. So that's playing out where it's probably not something they're willing to do, but I had to educate them on the value of like a money market over like a pure savings account. Why make $12? Why make not $12, 0.0, whatever it is, 0.01% yield when you can get 4.5% annually fairly easily, or even just 4%, I think, even at some of the bigger banks. That's available. So really interesting to understand how these guys, who are probably going to be mostly cash, looking for a short opportunity and then a chance to snap up real estate when it gets cheap. Really helpful to hear how they view all this and how they're playing it. Let's see. And just make sure everything's running. Next. Finally, the bulls. I don't spend a lot of time on the bull case because I'm fairly bullish just by nature. So I actually, the way I described this to my buddies recently, while I was talking about this, and I actually linked a few of the charts that Raoul Paul. So on what's on Raoul's mind today, or this was yesterday, I believe. Just in the first 15 minutes, he does a beautiful summary that's zoomed out saying, you guys, this isn't about the 4-year halving cycle of Bitcoin. This is about global liquidity. And it all has to do, and I don't want to give it, he's basically giving it all away. I don't think I'm giving anything away. He gives something away in his, if you sign up for his service, you get like very specifically, technically what he thinks is going to happen and how it all works. But he kind of gives some high level here that I think is very telling. And it really aligns well with how I'm starting to view this after listening to everybody talk. It's about global liquidity. And so I said, my friend, let me talk through this conversation. Dr. Awesome says in Okay We Cool chat, Discord, he says, he links stocks are unlikely to retest bear market lows and there's too much something. Let's see. Investors could miss out on gains if they are too gloomy about the economy, the strategist said in calling out Jamie Dimon's pessimism. So Mr. Big had linked an article that's just we're all doomed article on the economy. It pointed to it was markets.businessinsider.com. Sell stocks now as S&P 500 faces 22% slide. And Let me back up to here. This is good. It's all good context. So I'm going to just read from this thing. So after Mr. Big linked that article, I didn't even really need to read it. I'm watching so much of this content on either side, and I don't really, the corporate ones just are, they suck. Like, go look at where the corporates got their information. That's way better, and it's untainted. So I already am listening to, like, I kind of knew what this article said just by the headline. So total disclosure, I did not read it. I said in response, I think if you're wanting to try and time markets, you never do it with retail. If you read it from a corporate news outlet, the trade is already overcrowded. Joy emoticon. When retail starts pulling money out of their 401k, it usually marks a floor for stuff that will grow in the next cycle. And that's how it seems to be playing out this time. I'm predicting a decent uptick across most things over summer, and then a major pullback that feels different but equal or greater in severity to fall of 2008, in the fall of 2003. And I said that as sort of September through December range. Yeah, I think already liquidity's coming back, and this event I'm talking about, there'll be a pullback, but in growth, most of the pain's already done. The forced sellers are gone. So I think you'll get a pullback, but it's not going to be like what we just went through, I don't think. In crypto, growth stuff, growth tech, AGI stuff, biotech, all of the stuff that's going to be worth something tomorrow. Most of their pain's been felt is my base case. So, and if you look at Raoul's chart that he calls out here, the liquidity has already started. And if you look, those bands of liquidity are getting bigger. And I think that's just something, a system like the Eurodollar, a reserve currency, goes through at its end of life. So, and I haven't back tested that against like the pound sterling. That's something I should probably look at. Anyways, so I think there'll be a pullback, and there'll be a credit crisis around commercial real estate and auto. And I think they will have to do something like they did back that makes 08 look small. Just the same way that the COVID response made 08 look small. I think this thing is going to make the COVID response look small, which is wild. That's how you're going to get to some of the predictions, like NASDAQ 26,000 is from the debasement that will have to happen to pull it. We never get to just decide to embrace Mad Max. We're not going to do that. We're just going to be like, okay, well, we're going to print a shit ton of money, backstop all these small banks. We'll get the lending going because we can't have the economy just totally stop. Jobs numbers that's when that'll really sink in. The bad that's there. And I don't think that plays out until like December. So between now and like November-ish, I think we have a nice little run. That's sort of what and that, like, all of the data in growth agrees with me on this. Like, go look at a BTC ETH SOL chart. Look at NVIDIA, look at Tesla, look at all these things. And then, from about October last year to today, I think they're just going to keep going until this big correction happens in the fall. But I don't think it's going to be, I think it's going to hurt the zombies. It's not going to hurt the stuff that's going to be valuable tomorrow, is sort of what I'm thinking. And then all of the stimulus they have to do in order to keep everything from collapsing will just further fuel it. And then 2024, holy shit. Now, if you want to time that little zigzag, I may this time. I'm going to be losing. I really like CTO Larson's trend analysis. And when I see the gold shift to blue on the charts that I care about, yeah, I'm probably going to time that. And not get hurt as bad as I did in this pullback, now that I understand some of the cyclicality of all this. Back to this. So I said commercial real estate collateral shortage, credit and debt refinancing crisis, Fed slashes rates, and more QE or something like it. Don't be surprised if Jerry P starts talking about something called yield curve controls. The only way that they're going to be able to pay back all of the debt on is to issue bonds with capped yields. I think. I don't know. But so far, we're just following Japan. And Japan did QE, and then they did yield curve control. We did QE. Now, if you just look at the books, I don't see how we get out of it without yield curve control. So I think the big invention, the thing that they're going to give the Nobel Prizes in economics for after this one, this '08 style event is going to be for inventing yield curve control, which is really just a copy from what Japan did. Again, that's what Ben Bernanke won a Nobel Prize for, inventing quantitative easing to get us out of '08. But all they did was copy that from Japan. Okay, moving on. The net effect is currency debasement. Inflation, which is a supply-demand imbalance, the net effect is currency debasement. Inflation, which is a supply-demand imbalance that forces higher prices, is different. Currency debasement is creating more money with IOUs, which feels similar because prices rise as they do with inflation. But in currency debasement, the prices are going up because the dollars are becoming worth less. Then I said YCC, yield curve control, is where the government fixes the interest rate on the government bonds they created such that they can afford to pay all the debt servicing, which is the yield on the treasuries. I think I understand all that. It's very big and very boring. But after listening to really smart people like Jeff Snider talk for a lot of years, it's finally starting to sort of gel into some half-ass understanding. So let's see. And then I replied to myself on I'm predicting a decent uptick across most things over summer, and then a major pullback that feels different but equal to or greater than '08. I said, regarding this, I've positioned those such that I sort of make money in both directions with options. This is a pretty cool strategy, I think, but I put like 100 hours into researching how it works and practiced a bit, and I recommend the same if you want to try anything like that. So I described a little bit of what I'm doing with options to try and catch the movement in the volatility spikes. If it goes, why not make a little money on that movement? That's the thinking. Let's see. And now this is where Dr. Awesome chimes in. This is all based on what you listen to. A lot of fund managers and economists are calling for no or mild recession. Pick your poison. He's right. But I think what you should do is listen to both very carefully. Listen to the bulls and the bears, and then try and figure out a strategy where you kind of win by default no matter what. Because they both get to be right. That's how I'm trying to think about it. Let's see. So I'm going to skip down to where we get back to the relevant conversation. So that's where Dr. Awesome links an article from Yahoo Finance that says stocks are unlikely to retest bear market lows, and there's too much... I don't know what it says, probably money on the side or something like that. And Dr. Awesome says, here's a completely different one to the one you posted the other day, Mr. Big. So again, for anybody who's just watching my content for the first time, I swap out my friends' names for names they picked to mess with me. That's who this Dr. Awesome and Mr. Big are. They don't like to live, or they have chosen to hang on to privacy, whereas I have abandoned it. So the silly names are them, my friends messing with me. Anyways, back to it. Dr. Awesome says, here's a completely conflicting story, the one you posted the other day, Mr. Big. And I said, no one can decide what's about to happen. I'm soaking all of these up like a sponge right now, Joy Emoticon. The thesis I like right now is an epic move in both directions before end of year, up, down, then back up again big in 2024. And Dr. Awesome says, it's best to do nothing too drastic. The safe move would be to go all to cash and put it in a money market making 5% if you are risk averse. And then we go to talk about some different things, but then I responded to that comment. I said, I like your do nothing plan better. Market timing with cash leads to bad outcomes. So this is where, I mean, unless you're very expert in things like this Ken McElroy, perhaps George Gammond, all of these guys that are, and gals, Danielle DiMartino Booth, that have really studied a specific market, they can do some fancy shit with just going in and out of cash. But if you look at some of the charts and you listen to Raoul Paul in what he's saying, there's an inevitability to the direction of all this that follows global liquidity. And since we're already in a global liquidity uptick, it means that if you're not at least just getting, but here's the thing. In the past, you would have just done like the S&P 500. I think you could way outperform if you just went with like the S&P 50. Like the top 50 performers or the top 10 performers in the S&P 500, if you just kind of spread the allocation of everything else up that's in the S&P 500, and then you just spread that mix weighting of the S&P top 10, and then you rode that, I think that's a way to outperform rather than just going S&P 500. That's a way you can, like if you really wanted like a safe line through this inevitability and you're too uncomfortable with the growthy shit and you can't stock pick a thing like a Tesla or you're not in one of these, you're not going to go scoop up all this commercial real estate with dry powder you've got set on the side when it gets and that's even that. I don't know what you're going to do with some of these buildings. Anyways, I think just because there's so many, AI has changed, is so disruptive, and it's Reed's law. It's the one that's I forget the network effect law squared is what we're on for AGI. So a lot of the stuff in the S&P 500 is about to get incredibly disrupted. And if you want to outperform, I would say safer than trying to time would be just take, if you want the safe, boring route, build an index of like the top 10 in the S&P 500, because you know how they're inevitably going to keep it on the line, but all of the performance is going to come from them, not all those zombies. That is a strategy. It is one I would consider for anybody who wants like the more safe route. Just like subtract 490 of the things, or 450, or at least 400 of the things that are in that thing, and weight yourself in that. I think that'll get you a nice divergence if we ever saw like a NASDAQ 26,000, which I think if you listen to this first 15 minutes of Raoul Paul talking, he makes a very compelling case for this whole system works off that global liquidity and S&P 500 trajectory, or NASDAQ, all of those things, right? Or, do whatever feels right to you. But I would encourage listening to all these people talk first. That's what I would say. My advice is listen to me, listen to Raoul, listen to all of those bears I mentioned, and then decide what to do with that. All right. That says, let's see. It's saying NASDAQ 23,000 by 2026. And I said, unless something changes, that's the trend since '08. Sounds wild, but look at that line. It's like, and in the other line that he shows after this, it's like 97% accurate to global liquidity. And then, oh, I'll put these charts up. That would make all this much easier. I'm going to just display each of these three charts. So first I will show this Fed balance sheet overlaid with the NASDAQ. And then I'll show the one other chart that the really important one is the liquidity chart. It's GMI's total liquidity index year over year, public, private. That is the one. That is the key to this whole damn thing. That and understanding its relation to the other charts. So once you have it, oh shit. Okay. So I said, I think the right view of the bull or bear cases is that it's an oscillation on an exponential curve. The bears are mostly right in the beginning until enough progress is made that the bulls get to be right more often than the bears. Or when they're right, the moves, it's like the corrections are more in the bulls' favor because they're growing us on that exponential curve. That's why I choose just playing pure strategy without emotion and being sort of totally cool with any losses. It's all trying to think of it like it's a video game. When I look at it, that's how it feels like the thing works. So you're wise to listen to the bears for a second when it gets too frothy in the liquidity cycle. And then when the liquidity cycle looks to turn, that's when the bears are right. And then you just look for liquidity to bounce back up. And then you get back in, move out on that chart. That's how I'm thinking about it. And I think that's what Raoul has to say in his paywall content. But I think that based on listening to him talk in public, so I don't feel like I'm giving anything away. Anyways, let's see. I don't subscribe. I'm a subscriber, and I'm because I'm so grateful to this guy for his content. I got his NFT. He made a Genesis NFT, which is like a collectible and I feel like so I'm more than paid up on. I got you back, Raoul. But I don't. That even might give me access to Global Macro Insider. I should look that up because I'd love to hear if I'm accurately forecasting what his very granular view of all of this looks like. That would be helpful information. I may do that. Anyway, let's see. It has to do with the 3.5 to 4 year debt refinancing in the global economy. Listen to Raoul explain it. Yeah, so if all the upward movement in markets can be tied to this chart, as I think they can, the bear is over for real growth. The next 12 months going to be quite a ride if you're holding the right stuff. It has to do with the 3.5 to 4 year debt refinancing in the global economy. Listen to Raoul explain it. So yeah, it's like liquidity has to come back because otherwise everything breaks. And we're never going to accept everything breaks. We can't do that. So yeah, that was a lot on my thesis. That was a lot on the bulls and the bears. Right after I record this, I'm going to go have breakfast and I'm going to listen to Raoul Paul talk with Michael Howell, Understanding Global Liquidity. I follow Michael Howell and Cross Border Capital on Twitter, and if global liquidity is the key to this whole thing, he is a very important person to be listening to. So I will listen to all 10 minutes of what he has to say, maybe twice. And let's see. So that's Bulls, Bears. How I'm trying to squish them both together in my head. And then I'm probably going to listen to Blockworks Macro, the macro trading floor. I like these two young guys. Alfonso Picatello. I'm murdering his last name, but everybody does. It's fine. Macro Alf and Andreas Steno Larsen. They do a talk. It looks like Lynn Alda might show up later. I always mess up her last name also. I'm not sure. Or this was a link to one of their past episodes. Anyway, let's see. On today's episode of Macro Trading Floor, Alfonso and Andreas begin by breaking down the bank earnings on the back of the recent banking turmoil across markets. They then discuss why markets are rallying as everything from the S&P 500, banks and Bitcoin begin to retrace prior losses. With the US dollar also erasing its gains against other major currencies, is this the perfect environment for a continued rally or not? Finally, Alf and Andreas share their actionable trade ideas. But to hear that, you'll have to tune in. I will tune in. I want to hear what these guys are like the boring traders, is what I think. Alf used to manage some big sovereign wealth fund or some crazy thing like that. So they do like these optioned, pair trades where they're trying to eke out the best of under 10% gains. And that's just totally different than what I'm doing, but I find their insights very helpful, and their how they describe what's happening in the economy. Alfonso, in the first 3 minutes, lays out a strong case for the credit crisis, even though it's probably started. We won't actually feel it for about 10 months. 6 months. 6 months from today is October 19th, plus or minus, which is right on target with that whole up, down, then back up again thing that fits in line with my thesis. That's why I find it extraordinarily helpful, even though I'm not really interested in the specific trade tactics these guys use and how they go about it. It's just way more conservative than what I do. I still find it's just very useful to try and make sure what they say is harmonious with my thesis. Seems to be. All right. Next thing I watched was Empire did an episode. So let's go crypto for a second, because I'm trying to watch crypto I watch it less carefully, but I tell you what, when these two guys, Kyle Samani and Tushar from Multicoin Capital, when they talk, I listen. I find them to be the two most sophisticated VC players. They're engineer investors. They understand things like scale. They understand. I'm very interested in what these two gents have to say ever. And they went on an Ethereum Maxi channel, which is, I don't want to, the Ethereum Maxi channel is really bankless, but these guys are in the camp that Ethereum's definitely going to win, EVM's the way, all that. And at least what's his name? Yano. I'm so bad at names. Jason. And Santi on this Blockworks Empire show. I feel like he gets it. He sees it. And Jason is trying to reconcile the fact that he's basically all in EVM, and there's two guys that seem very competent in what they do who've rode the correction in an Alt L1, just as I did, tell them real specifically the problems with L2s. And man, this is the stuff. So this is when in the last liquidity cycle, I was very, I pretty much was only in Solana because I listened to all of the no sharding podcast where I listened to engineers talk like Kyle and Tishar do here about like technically the issues with L2s and sharding. Specifically sharding in like for a lot of engineering reasons, sharding has problems, but just finality. I mean, you can't stack up a bunch of there's a lot of very good reasons to look at the L2 approach, and I think it was communicated very well here to an audience that in a way where an Ethereum maxi gets it. And the importance of having your EVM be single threaded, that's a deal breaker. It's just so I didn't learn a lot here, but I got further confirmation. And the part that I did find very useful is because I do find these two at Multicoin Capital to be sort of, this is the A game in my view, after looking at all of crypto for obsessing over it for like a few years, about a year back. Just a 4-year deep dive on crypto. I came out of it thinking these are the two people I want to listen to and that are, like I said, most sophisticated in their views of the space. So the stuff they talked about, I was really interested in the segment that starts about 35 minutes where Kyle Samani talks about the intersection of AI and crypto. Don't be a maxi. Don't like or be a maxi if you want to be, but don't not listen to people that think you're wrong. You should be listening to them. That's how you will get further confirmation that like you're going to hear, don't listen to people that just tell you you're right. You want to go look at a whole bunch of people that tell you you're wrong. That's why I listen to most of what Empire and Bankless have to say. So, I really thought this section here in the middle of the intersection of AI and crypto is really important. So I'd already felt really good about I described in my playbook episode some of my bets I was making that align with that, this thesis that he describes. And I got some new ideas from this conversation that I'm going to try and look up. I want to see how Hive Mapper might grow over time. I was already looking at it and had a position, but I'm considering growing it if I think that they could make maps better by making it something that is tokenized where all the participants get to feed maps and make them smarter than like what Google Maps has. And they get a direct financial incentive for doing that. I don't know. Cool, interesting stuff. So I found this conversation really helpful, and it was funny hearing. It's funny hearing Kyle Samani. He was asked about sort of in the very beginning, the first like 15 minutes of this. Kyle Samani is asked about like the moment where it all kind of came together, and it was at Breakpoint. I was at Breakpoint. I was in Lisbon, and funny enough. I just kept running into Kyle Samani everywhere I went, but I was so tired because I travel I used to travel really poorly. I could not sleep. If you took me out of my time zone and you put me in a room I wasn't familiar with, I'd have anxiety about my sleep problems. So I just didn't sleep for like 8 days. I couldn't talk. Certainly on that day where everything was falling apart with FTX. But I was at the airport. I rode on the flight from Lisbon through London. I was on that London flight with Kyle Samani. He sat like diagonally to me, like a row up. I was like, please don't put me next to Kyle. Please, I can't talk right now. And he doesn't want to talk to a crypto bro, which I wouldn't call myself. But I was sitting there in the terminal and I'm looking across and he's on calls and I'm like, boy, I would love to be able to hear that conversation while we were sitting in the terminal in Lisbon. This is like 5:30 in the morning, like the day after the conference. And I'm just sitting there miserable as F, only got about 4 hours sleep in me after days of not sleeping. And I'm listening to podcasts and listening to Ran. And I mean, this is as FTX blew up. And I'm sitting there watching this guy. And it's funny, every time, like, I just kept like I was walking, as I'm walking up to the like in Europe in Lisbon, they don't have the concourses where you walk right onto the plane. You get onto this bus and it takes you out to the plane, and then you climb up one of the mobile ladders. So as I'm walking up to the bus, here's Kyle standing there looking right through me. I mean, it's a bad day for all of us. And I kind of tapped him on the shoulder and I'm just like, what a bloodbath, huh? Kind of just trying to give him a moment of mirth. And I feel like he kind of looked at me like, dude, don't touch me. But it was just kind of a funny moment. On like the worst day of this whole retrace was probably that morning. And I don't know. That's my Kyle Samani story. So much respect for what he and Tushar, like that team, that combo. Oh man. Tushar Jain, terrible with names. Anyways, this is a good convo. Even if you don't like Solana, even if you don't like crypto, if you want to just hear about just that intersection of AI and crypto, I thought was really interesting. And especially the proof of human stuff. I think that looks a lot like State Copy Podcast. So, I mean, like in a real way, I'm trying to seed that with all of this. So I was real curious as to what they had to say about that. Let's see. Next up was Mhax Tegmark, the case for halting AI development, Lex Friedman, 371. I watched the first 42 minutes of this. Great. And my dad even enjoyed it. He was sitting with me, visiting. And he was enjoying this conversation. So if you want to bridge to the boomers talking, I can't say it works with everybody's parents. It worked with mine, though. He was finding the conversation really fascinating. So, we got that far in. And AI is going to change everything. There's so much conversation happening around it right now. You should be listening. It's important. Then I watched Alan Watts, Joyous Cosmology, Being the Way, podcast episode 21, hosted by Mark Watts, his son. I listened to this, the first 50 minutes of this lecture. I found it fascinating. And, I also saw this ledger status of, I forget his podcast with Kobe. He linked this East Palestine train derailment explained. And I thought this was a really good. This is a podcast called Practical Engineering, and this guy just did a breakdown of, when I heard about, and I even mentioned this in some of my podcasts recently, there was a lot happening. Like a month ago, all at once, and it started to feel kind of like, what's happening? Like we're multiple train derailments. We got a hot war in another part of the world. We've got, we just came out of COVID. There was so much happening. There's just such a sense of fear and anxiety at that moment that, it was hard not to start connecting dots between events that were happening. But as always with these things, I always make myself go back and make sure I understand it right. So when I heard that somebody had done an engineering deep dive on the failure, this looks like a sad case of really terrible shit happens. The way he described it. Now I only got to 10 minutes. I'm going to watch the other 7 minutes to make sure there isn't some other contrary view of the events as they happen, but it looks like a wheel bearing failed. And it talks about how the technology we use to identify those types of failures. And it talks about how this whole cleanup effort's working. It's 17 minutes long. I thought if you were curious, that big horrible fire that happened in Ohio that we were all going, holy shit, that big plume, hell plume. I watched, I found this video very helpful. And as I see more content like this, I'll probably chase it down because I like to really understand how things happen. And I never really, I don't like the pro-conspiracy or anti-conspiracy view. I like just going, a complicated, massive event happened. I should study it. I should listen to people's many perspectives. And then when I feel like I have enough to put it away, then I will. This one I will continue to seek out better understanding of. It's a big deal, it seemed like a big deal at the time. And so, yeah, I don't know. I'm going to provide this link in the description as well. And that marks an hour 2. So, to anybody listening, I think you're the coolest. And look for another show later this week. Thank you.
Now it's coming around, you're feeling cut down and in the ground, and so we all come together. We making a sound, we sing. Look at all this love we found.